There are basically two types of long-term care insurance on the market today. Traditional long-term care and asset-based or hybrid long-term care insurance. Both have pluses and minuses, although asset-based long-term care seems to be the preferred option today for most people. With traditional long-term care insurance, you pay a monthly premium just like you do with car insurance. That amount is based on your age and the amount of daily benefit you want the policy to pay if you ever need long-term care. The great thing about long-term care insurance, unlike Medicaid, is that it pays for in-home care, assisted living care, hospice, and nursing home care. So if you need care, then the policy reimburses you for payments that you make for qualifying long-term care expenses to a facility or to an individual who's providing in-home care. The drawbacks to traditional long-term care insurance are that most of these policies now have time limits on how long they'll pay, like maybe 3 to 5 years. Companies used to write policies with lifetime benefits, but that's no longer the case. The other drawback is that premiums for traditional long-term care insurance continue to increase even after people take out the policy, and it can be difficult to afford in some cases. Asset-based long-term care or hybrid long-term care insurance works differently. While these policies also have limits on how many years the policy pays, there's at least one company out there that will still write policies with lifetime benefits, and that's important to some people. With asset-based long-term care, you take an existing asset like a CD or some investment account and transfer that over into a long-term care policy. In doing so, you then create a pool of money in excess of the amount of money you initially deposit. The amount of that pool depends on your age and the amount of the initial investment. If you ever need long-term care, then you can withdraw a certain amount each month from that pool of money to pay for care. The policy will pay for a certain number of months until that pool runs out. Again, if you have a policy with a lifetime benefit rider with this one company, and that's an extra fixed premium, then that benefit will be payable for lifetime even if it exceeds your initial investment. The other great thing about asset-based long-term care is that if you never need care, then the amount in that pool of money goes to your heirs instead of losing it. So it's not use it or lose it type of care. So long-term care insurance is the best way to pay for long-term care expenses. If you have questions about it, please let us know.